Hello everyone, George DeSantis here with a look at the market. A shortened version, midweek, Wednesday, June 24th. We've had a pretty rough day. The market was down anywhere from 2% on the NASDAQ to 2.5%, maybe 2.75 on the Dow. Um, so I thought I'd do a little follow-up on the market here and take a look at some charts. And since the mantra is we should trade what we see, let's see what we see. Let's begin by bringing up the disclaimer so that you can take a look at it. It's important that we do this because need to understand. I'm not trying to indicate to anyone here who's looking at this video what they should do, because I couldn't possibly do that. I don't know anyone's financial status, and I'm not a financial advisor. I'm doing this for my own purposes, and I'm posting it on YouTube so that friends and family and anybody else can take a look. That's basically what it's about. So let's take a look and see what we see. So here's a weekly chart of the S&P 500. This is something we usually begin with. Um, and some people might be curious, why do we start with a weekly chart? Why don't we just take a look at the daily chart or 60-minute chart? Well, one of the things I learned from my friend Alex Elder is the triple screen approach. In other words, you don't want to look at one time frame, the time frame that you're trading on, making your your entry and exit decisions on. You want to take a look at a time frame that is higher than that and higher than that. So we take a look at the weekly chart, because on this chart, if it were stock, for example, although this is the index, S&P, if it was stock, we would make a strategic decision. Is this a stock that we really should own at this time? What does the chart tell us that would convince us that this is a stock we should be owning at this time? Well, on the daily chart, we would make the tactical decision, and that is this a good time that we should buy that particular stock? Is this a good time to buy? And those are reasons why I usually start with the weekly chart. So let's see what we find here. Um, we have the 3 or 4 moving averages that we use. The 4 exponential moving average is this yellow line. It's above the 9 exponential moving average, the red line, and that is above the 30 weighted moving average, this green line. And if you look very carefully, there's a magenta line just running alongside, just above the green line here, and that is the 50 period moving average. In this case, it would be the 50-week moving average, okay? So moving averages above each other on the weekly chart. And so from the point of view of the moving averages, we have an uptrend. The shorter term average is above the longer term, and that is above the even longer term. So we have an uptrend insofar as that's concerned. The next thing that we can see, and we're going to take a look at the bullish indications first, is that the parabolic is still below the most recent bar. That's this current week, because we haven't completed it yet. So the parabolic is still indicating an uptrend here. Parabolic is the parabolic stop and reverse indicator, parabolic SAR. So when it's below the most recent bar, it's saying there's no need to think about that the trend is being reversed here. If the parabolic switched to being above this bar, we would say, whoops, parabolic just indicated that we should stop and think of the reverse trend. In other words, a downtrend instead of the uptrend. In this case, it's indicating we still have an uptrend. This is a 200-day moving average. It's 200-week actually in this case. So that's what we find here. Now on the MACD with the 1939.9 in parameters, we have the MACD histogram trending up above the 0 line. Now Jerry Appel, who came up with this MACD indicator. He's a psychologist too. Jerry Appel did some research on both of these parameters, this one and this one, the 1226.9, 1939.9, as I mentioned before to you a couple of weeks ago. He said he finds that using this one, when it drops below the zero line, it's a more effective, more accurate signal to sell, an accurate sell signal. Whereas you want to use the 1226.9 for buy signals. When it crosses above, it's a good buy signal. Okay. So now we still have then uptrends going on here insofar as the MACD histogram is concerned. And if we go down to the percent R indicator, I changed it to 14. No big deal. I usually use 30, but I did that for a purpose. But anyway, percent R is still above the magenta line. That's bullish. And the sum of the rate of change indicator, another one of Jerry Appel's indicators, which I wrote in here, formula here, it's now above the 4% line. So there's hardly anything to be bearish about. In fact, I can't find anything to be bearish about on this weekly chart. Now here's a daily chart of the S&P, and we'll usually start off with the moving averages. You could see that the four exponential moving average crossed a little bit below the 9 here, and then it recovered just to run alongside the 9 here, and then today it's breaking down below the 9 exponential moving average on this bar, on today's bar, so Wednesday. So that's not a good thing if you're bullish on this market, because I use the daily chart when the 4 crosses below the 9. I usually use that as a sell signal. We're not at the end of the week yet, so we want to see if this is going to hold up for the rest of the week. Now, the other thing we're noticing here is that the parabolic now switched on the daily chart to being above this when today's bar, and therefore the parabolic is saying we're now switched to a downtrend on the daily chart. On the daily chart, we got a sell signal from the 939.9 MACD histogram because it turned bearish here. Okay, and the same thing is true for the 1226.9, and you can see that the percent R indicator crossed below the 50 magenta line, and also the sum of the rate of change indicator crossed below. So the daily chart is looking much weaker, but let's turn to some bullish kinds of indications that we see here. One of the things that I'm noticing here is that we have a symmetrical triangle. This line, this yellow line, and this yellow line forms what we call a symmetrical, not really symmetrical, but we call it a symmetrical triangle. And it's that A, B, C, D triangle. Now, when we have an uptrend that is followed by a symmetrical triangle, at the end of that uptrend, it usually gets resolved on to the upside. In other words, this triangle will be considered a continuation pattern, continuation chart pattern. So from the triangle's point of view, excuse me, this is a bullish indication because it's an uptrend here. We now have a triangle, a symmetrical triangle. We should get, if it holds true again, as it usually does, we should get a move back up. Okay? So that's one of the things that we're noticing here, insofar as bullish tendencies are concerned. There's something else that I want to point out, and that is that there's another price pattern here that I'd like to just mention to you. It's called an ABC pattern. Ignore these letters here for now, but consider this low here, A, consider this C here, B, consider this low here, D. Okay, so this is A, this low, to this high, which is B, and this here is C. Now, if we don't take out this A, this bottom here, then it is likely that this pattern here will result in what we would call just a correction. In other words, we don't get a major pullback. If we break this low, then we are likely to get a major pullback, more of a serious pullback than just a correction. Right now, we have a correction at the 38.2 Fibonacci retracement. We pull back to this level. We can see that dotted line. But if we break this level and come all the way down to break this level, okay, this 2969 or 2968 level, then we have more problems. But right now, it looks to me like just a correction to the 38.2 retracement, Fibonacci retracement level. Now, let's look at the NASDAQ. We haven't looked at the NASDAQ in a while. I usually just deal with the S&P and then go to individual stocks. Today, I'm just going to focus on the indices, the general market. Where is this market seemingly heading? Okay, that's what I'm going to do. So here's a weekly chart of the NASDAQ, the Qs, okay, representative of the NASDAQ. And you can see when we look at the moving averages, you can see that the 4 crossed over the 9 here. The 9 crossed over the 30 here. We've had this nice uptrend. 4 is still above 9, 9 above 30. Parabolic is still below the most recent bar. So all these indications here are bullish. We are, trending up and a nice bullish uptrend, okay? If we look at MACD, we could see that MACD started trending up from below the zero line, which is one of the best times to be buying the instrument, whether it be a stock or an index. And it turned bullish here above the zero line, and it's still there. And also on the other MACD histogram, it's still bullish and trending up. Now, Williams percent R, it's above the 50 magenta line, confirming that. And the sum of the rate of change indicator, which is a momentum indicator, it's also above the 4% line. So on the weekly chart of the NASDAQ, it looks pretty bullish. And even though we're having a rough day, we had a rough day today, Wednesday, we'll see where it all ends up. But this is a very bullish looking chart. And here's a daily chart of the Qs, the NASDAQ. And what do we find? Well, the 4 exponential moving average is still above the 9. 9 is above 30. So we have a uptrend insofar as moving averages are concerned. The parabolic is just below the low of this bar, of today's bar. So we'll see if that really switches to a downtrend on the NASDAQ as well as it did on the S&P. So we still have an uptrend here. However, just as we saw, if you recall a couple of weeks ago, we started noticing a bearish divergence of MACD on the S&P, and we now have a bearish divergence also on the NASDAQ. See, NASDAQ makes a high, MACD makes a high. NASDAQ pulls back, MACD pulls back, goes into negative bearish territory. NASDAQ rallies, makes a new high. MACD rallies, makes a lower high. So this divergence is called a bearish divergence of MACD. And it's on both of these. It's on both of these with both parameters. The one thing to notice here, though, is that following Jerry Appel's advice, and he designed this MACD, this MACD of the 1939.9 hasn't yet crossed below the zero line. That might be nitpicking, but let's follow the rules. And he's saying, look, when this crosses below, then you have a sell signal, as we did here, but we recovered very quickly. So if you ask, in conclusion, if you ask me, where do we go from here? First of all, I haven't sold a thing, okay? I still hold, I'm almost fully invested. I have very little cash on the side. So I am not expecting a big collapse. I'm expecting a correction. And so have a good week, the rest of the week, and I'll talk to you again on the weekend.